So if you wanted to open an online investment account, how do you pick the best one? In this video, we're going to go over the 4 top brokerages in the US and see which one is the best. All this coming right up. Hey there, this is Tom Young with Jarnex, bringing you the tips and tools you need to master personal finance. We do a lot of tutorials just like this one, and so if you're new to this channel, do consider subscribing if you want to stay up to date with things. Now, if you're watching this video, you're probably considering opening an online brokerage account for investing, and that's absolutely great. Now, the question is though, which one is the best for you? And to answer that question, we're going to take a look at the top 4 in the US. And these contestants are Fidelity, Charles Schwab, TD Ameritrade, and Vanguard. First of all, we should take a look at what exactly these 4 have in common. Why did we pick these out of the 3,600 broker-dealers in the US? Now, the first thing is that they are large. These are the biggest 4 in the US that accept retail investor money, and all of them have over $1 trillion under management. The second thing is because of their scale, they have extremely low costs for trading, and that's absolutely great. These are only between $5 and $7 per trade, and these numbers can actually go down the larger your account gets for some of them. The third thing that differentiates these guys from the rest is that even though they're online brokerages, primarily they run a hybrid model. And that just means that they also have personal financial advisors that if you have a particular question, they can assign you a particular person to help you out answer that question. And a lot of online brokerages that are smaller don't have the resources to do something like that. Now, I just wanted to let you guys know that there are other options available as well. And if you're interested in learning more about them, we actually do a video that takes a look at all of the different types of brokerages out there. So if you're not really sure whether a hybrid online account is right for you and that you want to go with, like I say, a full service account, check out the video. It's coming up right after this review. So without further ado, let's meet our first contestant, Fidelity. Now, Fidelity actually started off as a mutual fund manager throughout the 70s, and some of the best mutual funds at the time or in the world were actually run by Fidelity. Now, its history is still evident in its offerings because they have a great mutual fund choice and a library, a huge library about funds. And so these guys really did come from a fund manager perspective. Now, today's Fidelity is actually a little bit more like a hybrid broker. And that's because in the 2000s, they started pursuing that hybrid model. And so even though they still have great mutual fund options, they also actually have some of the cheapest online trading out there. Now, contestant number 2 is Charles Schwab. So Charles Schwab is actually a little bit different from Fidelity from where it came from because it started off as a brokerage as opposed to a fund manager. And that just means that they were out to educate consumers and to just make it easy for them to buy what they wanted. And so that history, that legacy is actually still evident in its offerings because it offers US stocks and 30 foreign exchanges. And that actually is, of the 4 contestants, the most foreign exchanges out there. So today's Charles Schwab is actually a little bit more of a jack of all trades, and that's because of their history as well. In the 1980s, they were actually bought out by Bank of America, and they added on a layer of financial advisory at that point as well. Now, our third contestant is TD Ameritrade, and they also start off as a broker as well, actually a lot like Charles Schwab, except for they focused only on the selling of products as opposed to any education at all. And here's a quote from the founder, actually. All we did was provide the opportunity for people who enjoy making their own decisions about buying and selling stocks. And that is actually really evident in what TD Ameritrade still does. They have a huge amount of trading tools, but not necessarily the advice behind it to help you figure out, well, what should you be investing in. That said, they did buy Thinkorswim in 2009, and that actually does have a library for day trading, basically. A lot of technical analysis information is available through TD Ameritrade. Now, the 4th contestant is Vanguard, and Vanguard is actually really well known as the founder of the modern day ETF, the low-cost ETF. In fact, John Bogle was credited by being the first person to produce that index fund that was available to individual investors. And today, they're still the leader in ETFs. The other thing to note about Vanguard is it's actually organized as a mutual, which means that all the funds are actually owned by the investors, and so all the profits actually go back to the investors in the funds. So in other words, it goes back to you. Now, Vanguard today is actually still the king of ETFs, and that is really evident in their offerings. It's actually the largest of the big 4 advisors with $5.3 trillion under management. BlackRock is larger, by assets, but they only actually work with institutional clients, and they don't actually have a way for you to invest with them directly. You'd actually have to go through a financial advisor to open an account with them. That's why we're not covering BlackRock today. So now let's take a look at the criteria we're going to use to grade these four on. The first is stability, and that's just what I mean by that is financial stability. How likely are these companies to collapse or anything to happen in a financial crisis? And as we saw from the last financial crisis, companies like Lehman and Bear Stearns that did appear very strong can still collapse if they're just not funded correctly. And so these are the scores that we have for the four. And as we see, Fidelity has A1, Charles Schwab and TD are A2, and Vanguard has, as a mutual, isn't rated by Moody's. And these scores are actually very good. To give you a sense, JP Morgan is actually A2 rated. Fidelity is the highest rated in this one by one notch, but these actually look pretty good. The next criteria is dollars per trade. And this is how expensive it is if you wanted to, say, just buy a stock. And here we have this. Here we have how much they are. Fidelity and Charles Schwab are the cheapest, followed by TD Ameritrade. And Vanguard, for small accounts, they actually charge $7. But the larger your account grows, you can actually get as low as $2. So that one is kind of a little bit more of a range, depending on how much you're investing with them. The next criteria we're going to take a look at is the ETF expense ratio. And for this, I'm actually going to use the example of the S&P 500. And this is the price, the amount that each player would charge for actually managing the ETF, because ETFs don't come for absolutely zero cost. They will take a slight percentage amount for the ETF as you own it. Now, here we have the scores, and Fidelity is the clear winner in this one. They actually recently cut their prices. I think it was in June or July of 2019. And so right now they are the cheapest. In the long run, all of these companies have been reducing prices further and further as they gain more scale. And so these numbers actually might change going forward. So the next criteria we're going to take a look at is how many markets can you trade on these? And here are the scores. It turns out that Charles Schwab has the most with you can trade all the US exchanges plus an extra 30 foreign exchanges. TD Ameritrade comes in last place. You can only actually trade US stocks on TD Ameritrade. And this actually does matter for diversification. Our next criteria are how many zero-cost ETFs do they have. And this is just how many ETFs that they have that you can buy without a commission charge. And here we see Vanguard is the clear winner. And that's actually not that surprising because remember, Vanguard is basically the king of ETFs. They were the ones that actually invented the ETF for retail investors to begin with. And so the other three players are pretty competitive still, but if you're looking at ETF choice, Vanguard is still king. So you might actually ask, well, why do you actually need so many different ETFs? Why not just say 10? And that's because if you want to invest in something very particular, like let's say international real estate or let's say Vietnam, it actually makes sense to have a lot of different ETFs so that you can actually target these individual things that you want to invest in. The next criteria we're going to look at is ease of use. And this is basically how easy their website is to use, how easy it is to make trades, to learn, to understand what's going on. And for the results here, I'm actually going to give them all the same grade, all A's. And that's because it comes down to personal preference. Here's a screenshot of all four platforms side by side. And I've taken out the logos so you can't actually see which one belongs to which. And it's really hard to tell which one is better. They basically are equivalent. And that's actually not that surprising because all these guys are competing with each other and they've basically upped their game to make it so that they're pretty level. And so really, it comes down to personal preference. Now, the one exception to this is actually day trading. And that's because TD Ameritrade has an incredible system called Thinkorswim. And this is really good for people who like trading often because it's basically a platform for basically day trading. Charles Schwab has an equivalent platform called Street Smart Edge. It's not quite as polished as Thinkorswim, but it's still pretty good. So next, we're going to take a look at mobile trading. And all four of these guys do allow trading by app. And these are the scores on Google Play for how good people find their apps. And again, it's a lot of personal preference. You might prefer one or the other, but this is just kind of the overall score that people have given. So here we see that Fidelity is kind of the clear favorite, followed by Charles Schwab at number 2. The final criteria we're going to look at today is advisor services. And this is how many branch locations they have. And here you have the scores. Vanguard actually doesn't have a physical location. You can actually call in to get a personal consultation. And so for the other three, you can see that they actually have a lot of offices across the United States. Charles Schwab and TD Ameritrade have the most. The Charles Schwab office, I know they have fewer than TD Ameritrade, but they do tend to be larger offices. So now with this score sheet, how do we figure out which one of these four is the best? And so what I've done is taken all of these and scored them based from an ABC grade to see which one actually has the highest score in the end. So for example, since Charles Schwab allows the most trading in the most foreign exchanges, I've given it an A+ and A- to the rest of them. And so here's what the scores look like. So now let's take a look at who actually comes out with the highest score. And our overall winner here, it looks like they are great if you want the most flexibility and you aren't sure how much trading you will do, advisor help you'll need, amount you'll invest, what you'll invest in, because this is in fact the jack of all trades. It is Charles Schwab. And the reason why they made it the highest score there isn't necessarily that they excelled in every single thing, but it's because that of all of the scores that we had, they performed pretty well on all of them. So let's take a look at our runner-up. Our runner-up is great if you want the lowest cost, you trade occasionally, and you're comfortable doing things yourself, and that is Fidelity. It actually comes really close to Charles Schwab, except for it's just maybe not as well-rounded. Really, you can't go wrong with either of these two. So just to round things out, let's take a look at two more awards. Let's look at the award for Best for Traders. And that's actually if you want to trade often, so that's 50 to 100 trades a month, and you want the resources to learn trading for yourself. And that winner would be TD Ameritrade. So if you actually know that you're going to be investing, but you're going to be trading a lot, then you really should consider TD Ameritrade over Charles Schwab because Thinkorswim is just such a great platform for that. So as a side note, if you are considering doing more than 500 trades a month, you might consider a trading platform like Interactive Brokers or something that's a little bit more specialized. And again, we're going to be reviewing these in the next video coming right up. So our final award is the best for long-term investors. Basically, if you want to just invest your money and then forget about it. So basically long-term investing with minimal trading. Passive investing, more or less. And the winner for that is Vanguard, the king of ETFs. And the reason why they are great is because even though they might have a little bit higher trading costs, if you're investing for the long run, that you're only really doing this investments, let's say on a year-to-year basis, then these trading costs don't matter that much. You're really just looking for the scope of things you can invest in, and Vanguard is still the top of that list. So I hope you found this video useful. If you have more questions, just shoot them in the comments and I'll post an answer to them. And also, if you want to take a look at other types of investment accounts that you can actually open, watch this video coming right up. We're going to take a look at all of them out there. So my name is Tom Young, and hopefully I'll see you again next time.